Okay, great, Richard. Well, thanks for joining us here today. Why don't we start with, you can help explain what Numerai is for the people who aren't familiar with it.
Yeah. Numerai is a new kind of hedge fund. We give away a large encrypted data set and allow users around the world to model the data. So we have 40,000 data scientists constantly modeling our data and submitting predictions back to our fund. So it's a way to basically crowdsource data science at a huge scale, and having 40,000 data scientists for one hedge fund makes it 200 times bigger than any other hedge fund in terms of the number of people who work on it.
Wow, that's crazy. So now you're actually live, and you've got so in terms of all these projects that have been funded, you actually have a product. It's out there. People are using it. Can you talk about kind of how it's being used and how that's been different than than what you thought it was going to be? Because that's the only thing we know for sure is whatever it ends up being is different than what you thought it was going to be.
Yeah, well, that's a good point. We originally started in 2015 and started paying people in Bitcoin. And that was just kind of like almost like a gimmick. Like Bitcoin was $400 or something, and no one really cared. People had lost interest in Bitcoin, but then what happened was that ended up becoming like a significant part of the company. The fact that like we were paying in crypto was like interesting. And around this time, I was also thinking about Ethereum, and that's why we decided to make our own cryptocurrency for our users to use.
And when did you create that?
So that came out last year in June, and we did it an unconventional way. We just gave it away. So we just gave it to our user base, didn't do an ICO. And the reason for that is that the token actually has a use case. So it's a staking token. So it's used on the Numerai platform to express confidence in your predictions. So whenever you're doing anything with crowdsourcing on the internet, people are going to try to basically game the system. And you make multiple accounts, hope that some of them work, but if you can have a token involved, then you can get some crypto economics and have some incentives for people to be careful and only submit things that they really believe in, because they're staking a bunch of this token on their predictions. If their predictions do badly, the token gets destroyed. If the predictions do well, they can do even better.
So how did you tell the people in the community that, hey, we're going to give you all these free coins?
We told everyone, in February last year, we told everyone we're going to give them the tokens, and they didn't really understand it because it was very early. Like Ethereum was only sort of being traded. Ethereum was $5 or something, and so no one really knew about Ethereum. And everyone thought, oh, it's just like points. Like these are just points for the website. But then when it ended up trading, it was, like they were like, wow, this actually makes up a large portion of the payouts. And Numerai is actually by far the most well-paying data science platform ever. We've paid over $10 million to our users. And that's kind of because of the fact that we're using our own cryptocurrency, and that the cryptocurrencies have gone up. So initially playing with Bitcoin.
So you actually have a utility token. People are using it. So talk about what that experience has been of the people actually using the coin, and how has that gone?
Yeah, well, that is the thing with most cryptocurrency projects. They kind of front-loaded, I guess, like get all the money first, and then do the product later. And there's some benefits to that, where you have certain projects that are very, very difficult to complete. But for other projects, this was a staking token, is an ERC20 token. We could just do it without using it as fundraising.
And so the idea is obviously is to create a prediction market. So talk about how that is going. So you paid out $10 million, and because people have done good work. How is that? How is that? Have you seen that impact the return of the fund?
Well, we can't speak publicly about the returns of the fund, but you can see on the website how some weeks you have users. You can see how many users get their stakes burned, and so that's to reflect the performance of their models. But remember, Numerai is only
or the poor performance of their models.
Yeah,
if
exactly.
They're getting burned.
Exactly. So there's have been quite a few burns, but that's kind of part of the process. You want the better models to, it's sort of like evolution. They won't come back and stake again if they keep losing. Yeah. So.
And so, but how is the performance? So over time, are you seeing the performance improve as you are you attracting more data scientists? What's the kind of how are things evolving in that way?
Well, it was interesting how it really was we didn't think people would use it as much as they did because when you do give someone a bunch of tokens and it strikes this value on a secondary market, maybe they'll just sell it, and but like most of our biggest whales do use it, and when you look at in backtest
and define a whale, so
the people who with the largest holders of these tokens are the users of the token, and in other projects the largest holders of the token are speculators who can't use the token, don't even understand enough to use it. So that's where you get a kind of top-heavy kind of unstable structure. But if you have an organic token where you have the people who held it are the people who can use it, and they do, that tends to be more stable, more long-term way of doing it. And then if you look at the backtest performance, so you can look at the performance, it's theoretical performance before cost and so on, but the staked models end up having a Sharpe of 2.1, and the unstaked models, the ones that people aren't using the token for, have a Sharpe of 1.66. So significant difference. That's sort of like the difference between a return of 20% and 16%. So that's a very, very big difference in the hedge fund industry.
How do you put Numerai in the context of some of the other prediction markets that we see out there, like an Augur or Gnosis?
Well, yeah, Numerai is a very different thing to those things. Decentralized prediction markets, it's like you're predicting on events or anything that you actually know what you're predicting. The thing about Numerai that's kind of counterintuitive, it's like it's only for data scientists because you're only modeling an abstract data set that you have no idea what you're modeling. So none of our users have any idea what they're doing, and we have no idea what they're doing either. But you can still use these technologies to trade based on that relationship of, they can see the data, but they don't know what it is. They can model the data, but they don't know what it is.
What do you think that other utility tokens can learn from Numerai and your experience of actually having utility tokens that people are using in volume?
I think, yeah, trying to get the holders of the tokens to be the desired population, that's sort of the biggest one. I mean, if you had a token where every single holder was a speculator and had no plans to ever use the token, then you know for sure that that token is worth zero, and that the speculators themselves have crowded out the use case. So it's sort of like this strange thing. The more speculation you have, the worse it is. But then the less speculation, the more you want to speculate on it. So it's like a strange thing. But and that's what's interesting with.
It sounds like an oxymoron.
Yeah, it is strange, and also it's hard to control because these things take on markets outside of the, like we can't control who trades the tokens. So it's very hard to control, but I do think you want to see people using it. And I wish people I wish there was a website called Coin Usage Cap.
Yeah, you'd be at the top.
Well, hopefully we'd be at the top. I don't know, maybe CryptoKitties and other ones have, but I think it's very important for the public to actually understand these things are being used.
Well, terrific. Well, thanks a lot. 10 minutes goes by fast. So,
Yeah.
thanks.
Thank you. Okay, our next speaker is Lex from Autonomous.
Wonderful. Thank you so much for having me here. This is a difficult lunchtime, so I appreciate you hanging out with me. What I'm going to do is show you my legal disclaimer, because that's super interesting. But what I want to talk about is kind of a macro view of the crypto fund space, their strategies, the stuff that they invest in, what that looks like, and how it's trending. So from my perspective, I'm a fintech entrepreneur. I built companies, and now I look at things as a researcher of the space. Autonomous, the company I work for, helps investors figure out kind of what to put money into, from public companies to fintech and crypto companies. So, not important. What I want to talk about and kind of start with, actually, by show of hands, how many people own Bitcoin? Good, 80%. Ethereum? 70%. How many people invested in ICOs? 30%. Okay, so this is still useful. I'll condense it to be really tight. There are three completely separate things. Bitcoin and the coins are a global macro trade about currencies, and we can believe or disbelieve things about that. Number two is enterprise blockchain, and that is what digital asset is doing for the Australian Stock Exchange, which is going to have about $1.5 trillion of equity value for enterprise blockchain. And then number three are decentralized applications, ICOs, tokens. You can think ICOs are a scam, but Bitcoin's going to live. You can think enterprise blockchain doesn't work, but public tokens will, right? So each one of these things is independent. And then this example just gives you a flavor of why I'm really excited about tokens. And the answer is economic scarcity. Right? So a physical object like a coffee cup is real. If I give it to you, I no longer have it. And if you give it back to me, you no longer have it, and I do. Whereas with a digital file, that's not the case. So you can't really invest it into an MP3. You can't invest into a copy of a digital film. But you can if it's on a crypto infrastructure. Right? So if I have a virtual reality coffee cup, and that's the asset, and I give it to you, I no longer have it, and you do. So that's kind of, for me, the underpinning of the whole thing that's happening and all of the innovation that's going on. And from a software perspective, I see no difference between a cartoon cat and an IPO, right? It's a wrapper for a token with workflow in it, business logic. I can reproduce my cats. I can use my cats for payment. Or I can take a security and I can pay out dividends from the security, or maybe I can vote my security. So from a software perspective, these are essentially the same things. Okay, so that's what I think forms the asset class. That's why it's not just, thank you for putting that on there. That's why it's not just the currencies, but there is this third asset class going on. And if you think about it, it's quite spectacular, right? If you put the bubble talk aside and you look at funding for the ecosystem, venture funding for Bitcoin and blockchain companies was somewhere between 200 and 400 million per year. And that's the blue color. The light blue color is enterprise blockchain funding. So again, somewhere between 200 and 400 million per year. And of course, the pink color is initial coin offerings. And I mean, it's a spectacular number. It's 5 times the size of all venture in the space for that year. And this year, even though the regulation's coming, and even though blah, 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 bubble, and everything's on fire, even though that narrative's in the ecosystem, it's uncorrelated to the economic activity that's shifting here. So you can see that today, right, we're on path to certainly break next year. And then if you do a little bit of hand waving and you say Telegram and EOS, which are still ongoing in their raises, let's take a look at that money and add it into where we are. And I mean, that's the story, right? We're essentially at the same place today in April as we were for the whole year of last year. And the good news from my perspective is that it's becoming a more rich ecosystem. It's becoming more fragmented of folks not just building, and there's nothing wrong with this, but it's not just people building the infrastructure layer. It's people building applications on top of that, financial markets on top of that, Internet of People, Internet of Things, social media, gaming, and so on. So I know this is a hard chart to see. It's on the internet. It's free, next.autonomous.com. What the beige and gray colors show is the FAT protocol investment thesis, right? So we're going to own Ethereum, and that's where the value is. The blue colors give you the financial exchanges, the banks, the payments apps, so everything that goes into building kind of the financial ecosystem of crypto. And then the magenta colors are things like decentralized healthcare records, the power ledger, shared, all sorts of shared systems that are actually use cases and applications. So you can see where the trend is going. And the outcome, people make this comparison all the time, but the outcome is you don't have to know which one is going to win. You just need to know that somebody in this cohort is going to be the Amazon or the Netflix of the future. So the statistic that's fun is that 4 IPOs between 97 and 2000 that were tech IPOs, in 10 years, 85% of them were gone. They just disappeared. You know, and these were IPOs. These were not early stage venture projects with people who maybe don't exist and are maybe robots, right? So of those, 85% gone in 10 years. You're laughing, but they are robots. They're all robots, each and every one. Everyone you follow on Twitter is a robot. You're probably a robot too, because you continue laughing. It's proof. So chart goes away. The chart on the right shows you returns over the stock market index of Amazon and of Netflix, and it's in log scale, right? So if you show Moore's law on log scale, it's a straight line, and so same thing for Amazon. Okay. Time is tight, so I'm going to talk even faster. Investors. Because this is an emerging asset class, there's an emerging set of investors, and they are real, and they are building vehicles that function in the real economy. So we have about 250 crypto funds that we track. Of those, you see a variety of investment strategies, everything from the venture slug. Venture investors think about this space as macroeconomic systems, right? So the MVPQ formula, that's how the value is derived, to the trading slug, which is the next piece of the equation. So that's folks who are looking at technical charts and currency movements, trying to figure out how to day trade the stuff. To the quant piece, which was on stage right before me, right? There's now probably 10, 20-ish quant AI funds in crypto trying to win this market. To even more arcane stuff. So you see this in the traditional financial economy. You see things like funds of funds. Or now you have tokens of tokens, right? So I'm going to ICO my token, and then I'm going to invest the proceeds of these tokens and send through the investment gains to the holder. And then, of course, you can also have passive beta strategies. So here's an index of the top 10 coins or the top 50 coins and so on. So a lot of this stuff is being built. 2017 is the year when most of it really started getting built. But we see activity continuing to pick up in the space. Assets under management are still quite low. So this is a split of the AUM by strategy. I'd say there's somewhere between 3 and 5 billion. It's very hard to nail down exact numbers. But the market goes up and down all the time, so it's hard to say. But somewhere between, call it 5 billion in AUM for these 250 funds. And of course, that is not equally distributed. So the chart that looks like a needle going up, that's the distribution of AUM that we track, right? So of that, the top 10 funds hold about 40% of the assets in the space, right? Top 10 out of 250. So it's a very big divide. But even this is very small when you compare it to actually the rest of the hedge fund industry or the traditional asset management industry. And what's interesting to me is not just kind of the stuff that the crypto funds are doing, but what traditional asset managers are building. So you see things like custody, right? So Coinbase trying to build out a custody offering. They custody today somewhere between, I think, 10 and 15 billion in assets. It's a meaningful amount of money. Number 2 is exchanges. I mentioned Australian Stock Exchange and digital asset, 1.5 trillion of equity value. And then, of course, the traditional products, the futures products that came out. So I'm out of time, but I'm going to leave you with this one thought. What I think crypto entrepreneurs and crypto startups should be thinking about isn't how do I make my 500K into 5 million, or how do I make my 2.5 million into 25 million. It's how do I build the most boring large vanilla product you can. You have about 37 trillion of wealth in the US. Go build the 401k product. Stop building the early stage stuff. Build the boring ETF so that 5–10% of Americans can actually invest in this stuff. Thanks so much. Autono Fintech or next.autonomous.com.